Hi, everyone. Welcome to Agribusiness Global Live. My name is Renee Targus. I'm the group editor for the Agribusiness Group, and presenting with me is.
Hi, my name is Sarah Webb. I'm the editor of Agribusiness Global. Thank you for joining us for today's webinar, Preparing for 2026, Opportunities, Challenges, and the Way Forward, presented by Derek Oliphant.
If you enjoy webinars and virtual events, we're having 3 virtual events in 2026. We'll have them focused regionally. So we'll have one on LATAM in March, one in Africa in July, and then one on Asia in November. These are free virtual seminars, and they last about 3 hours long. And you can get a really good feel for what's happening in that region, regulations, crop protection analysis, biologicals. Look for that and sign up for those. Again, they're free. And the recordings of those will also be available to all those people who sign up. The next event that we have in 2026 that I'd like to put on your radar is the in-person Trade Summit event. That's going to be on August 5th and 6th in Las Vegas. That's a great place to network and do business. We're going to be diversifying the agenda to include more biologicals, fertilizers, and the crop protection, getting everyone together so that they can do business. So please keep all of those, the virtual seminars and the in-person event on your calendar.
And last, we'd like to thank Rainbow Agro for sponsoring this and the series of webinars shown throughout 2025. Without their sponsorship, we wouldn't be able to bring you these educational webinars. So we thank you, Rainbow Agro. Now, allow me to introduce Derek Oliphant. He's the founding partner and senior crop protection analyst at AgbioInvestor. He is the key contributor to the AgBio Crop Report, which is a detailed qualitative and quantitative analysis on the global crop protection market, which examines company performance, crop and country markets, and product level trends. You can read his articles in Agribusiness Global magazine. He is also an ABG advisory board member. Welcome, Derek.
Hi, thank you, Sarah. Hi, everyone. So, as outlined there, what I'll be doing today is looking at an outlook for the 2026 crop protection market, looking at potential directions that we think the market is going to move through the year based on a number of different pointers that we'll look at as we move through. So first, what we're looking at here is company sales performance. Now, when we're talking about the 2026 crop protection market, what we are really referencing is product that will be used on the ground in 2026. So a very good indicator of that is the level of sales that companies are making into the channel now. We'd expect that to be used, as we progress through 2026 in most cases. We have seen in some countries a much more just-in-time purchasing approach, but generally what we see is that sales made at this period by the companies will be what used on the ground in the 2026 agricultural year in general. And for this, if we look at, we have separated the companies into various different tiers. So the major multinational R&Ds, the other companies, which are the leading generics, and then the Japanese companies, and also Indian companies, which is another side of the generics industry. And also distributors as well, which is mainly the large North American distributors. Now, what this shows is that it's quite mixed in terms of company performance over the last quarter. But also, if we look at the rolling last 12-month period, we can see that there is some difference between the different tiers as well. If you look at the latest quarter, major R&D companies, the major generic companies actually performing quite well. But for the Japanese and Indian companies, much more negative. So a lot of that is due to currency translation, because what we're looking at here is US dollar amounts. For the full year, the 12-month period, major R&D companies actually down slightly over that period, whereas the more generic side of the market, the major other companies actually up slightly. Now, what you tend to see in this cycle is in times when grower incomes are squeezed and crop commodity prices are down, for example, and the price of other crop inputs such as fertilizer or fuel are higher, you tend to see that crop protection market swings back to more the lower cost and generic side of the market. So what you typically see is in a weak commodity pricing market, the generic companies typically outperform the market. And for the more proprietary side of the industry, the R&D driven companies, the situation normally is a bit more negative. And this really highlights what we have been seeing in the last 12-month period, is that commodity prices are under pressure. Fertilizer prices are starting to increase again. We're looking at higher fuel costs. And this is really squeezing grower incomes, and it's meaning that in a lot of cases, growers are having to reduce crop protection spending, and typically this will, or sometimes this will mean trading down from maybe one of the more expensive products at the proprietary side of the industry, moving towards more typically low-cost generics. So that is one of the factors that we're seeing in this period here. Now, to break this out into actually the individual companies themselves, because it is varied within these tiers as well. We're looking at the first 9 months of 2025 here, so it's a 9-month view. And what you can see is, if you look at the R&D driven companies, again, it's slightly down. We are still having the impacts of low pricing. Inventory is becoming smoother. We'll see that in a later slide. But inventory is starting to improve, where that situation had been quite negative before. The distribution channel is a bit more loose now. We're seeing a bit more favourable weather in some regions, boosting the volumes. We're seeing higher areas of soybean and maize in Brazil, higher wheat areas and maize areas in Argentina. That's definitely benefiting the market as well. But you can see, it is mixed between certain companies. So for Bayer, more negative than other peer companies. Of course, glyphosate pricing is a key problem here. So overall, a slight decline in the last 9 months for the leading R&D companies. For the major generics, actually a bit more positive. So again, coming from what I talked about in the grower incomes and economics of production are definitely under pressure. So we are seeing the generic side of the industry outperform the R&D driven side. For Japanese companies, actually up as well in local currency terms. Growth stronger in the domestic market. Japan's actually been performing relatively well in recent years. Sales in overseas markets actually hampered by increased generic competition. So again, Japanese companies much more proprietary focused in their portfolios. So when they go into overseas markets, they are open to much more generic competition. For Indian companies, again, better in the local market and in local currency terms, but higher volumes generally and strong export sales. So obviously these companies are more on the generic side. So they are benefiting from the situation that I touched on. Now, in terms of how we look at this by region, this is looking at the all of the sort of companies that we are tracking in this analysis, but again, looking at the rolling 12-month period, and we want to split it out by region. So you can see actually relatively favourable across most regions. And again, what we're seeing is definitely a stabilisation in agrochemical pricing. We're seeing improved weather in a lot of countries. We're seeing increased areas of key crops in a lot of regions as well. We are seeing the alleviation of the inventory situation, which is definitely benefiting company sales. However, still issues around currency, generic competition, which holds back price improvement. But we are seeing definite stability in pricing, and we are seeing the benefit of new product introductions coming through as well, particularly in Europe and South America in this period. Now, I did mention about the effects of currency. So when we're looking at the market, we are generally talking about in US dollar terms. So when we're looking at other markets, obviously currency translation comes into effect. So here we're charting the movement in the major currencies against the US dollar in recent months. And you can see there has been some fluctuation across many of these currencies. We're looking at a weakening in the Brazilian real. The euro actually starting to strengthen against the dollar after a period of quite considerable weakness. Chinese RMB also weak against the dollar. Japanese yen, much more stable compared to where we were. And Indian rupee actually slightly strengthening against the dollar in recent months. So we are seeing a bit more switch into a stronger dollar than what we have had in the last few months. Weaker dollar compared to euro, rupee, and Japanese yen. But Brazilian real devaluation is an issue in the market in that Brazil is such a huge part of the overall agrochemical market. However, a lot of purchasing in Brazil is made through barter or actually in US dollar terms. So the impact of the Brazilian real devaluation doesn't have as big an impact on the market as if it were another major currency, let's say the euro. So while it is a negative, it's not as significant due to the fact that a lot of sales take place through barter agreements for grain or actually in US dollar. Now, I touched on the inventory situation before. Now, what we're looking at here is what our current expectations of the inventories in the channels are at this moment. We are seeing a shift to much more normal levels than what we have seen in the last 12 to 18 months, where it has been an issue. Oversupply has been an issue. A lot of it coming from strong levels of pre-buying post-pandemic due to concerns over product supply. And then coupled this with poor weather conditions that weren't very conducive to product usage. We then had a lot of product sitting on farm, at retail, and at distribution as well. So this backlog in inventory made it very difficult for suppliers to move product into the first part of the chain. However, we are seeing it now start to normalise. I'd say in North America, we're much closer to normal levels, and we have seen a big switch to just-in-time purchasing in that region. Central and South America, inventories starting to head in the right direction, but we are still seeing issues over poor weather in 23-24. A lot of low-priced exports from China as well. Much improved 2024-25 did relieve some pressure, and we are seeing higher areas now in 25-26 for key crops, which could again further alleviate any issues around inventory. For Europe, a much more normal situation, improved conditions for the 2025 winter crop, so able to move through the channel here. Some eastern areas still impacted by dryness, so there are concerns that there could be build up there. But at the moment, situation is very much more normal than what we have seen. For Southeast Asia and China, erratic monsoon did lead to issues around easing of inventory situation in India, so we are still having a slight issue there. Big capacity additions in China is likely to mean higher inventories in that country. But we are expecting increased pest pressure, which could help that through the coming season. And for Southeast Asia and Australia, down from where we've seen it a year or so ago, but we are seeing dry weather conditions and a lower wheat area in Australia, which could hamper inventory drawdown. So no real significant improvement expected in the coming year for Southeast Asia and Australia. But what I would say is we have seen a significantly eased off situation than where we were at a year or so ago. So definitely this is a benefit to, I wouldn't necessarily say the inventory situation has a direct impact on the market when we're talking about product usage on the ground, but it does obviously affect the companies that are looking to supply into the channel, and that can have a detrimental impact on price, which I guess can knock down all the way to usage on the ground. Now here, this is the 2025 market, so I won't go into a lot of detail, but it's just to give an idea of how we were moving through from 24 into 25. And in nominal terms, so that's not including any effects of currency, we are looking at, so that is taking effects of currency. We're looking at a decline of 1.8% in the crop protection market used on the ground. If we take out the effects of currency and look at the market in constant terms, we're actually looking at 2% growth. So the negativity really coming in from currency conversion. As I said, during that particular year, we were looking at a stronger US dollar. When we take out those effects, we're seeing actually a market increase. So a lot of recovery coming in from the situation that we had in 23-24. You can see there 24 was actually down 6.3%. So we have seen improvement in the market in 2025, and we are getting to a much more normal situation. So what I would say is that it's my expectation that 2024 represented a recent low point, and we are starting to get a lot of recovery coming into the market now, based on some of the things that we talked about and that I'll talk about later. But as you can see, the situation is much better than where we were at in 2024. Now, obviously, in the last couple of years, we have seen quite a sharp influx of new product introductions. A lot of this driven by the requirement for new modes of action to control resistance issues in a lot of markets in particular. And we've also seen a lot of new generation products coming through from the R&D majors. And a lot of these now have been introduced into the market. So obviously we would expect these to have an influence as we move through the year. And as I said, resistance issues can often lead to quite good acceptance of new products. For example, in North America, we're now seeing Metametron being approved for Apple and Pear. That says the US, but I think it's actually Canada, so it's a new introduction into Canada. We're seeing Amikarbazole now being introduced into maize as a pre-emergence herbicide in the US. And we've seen Syngenta introduce cyclobutyryl as a seed treatment, but also as a foliar application on turf and ornamental. So that's an interesting development. In Europe, we've seen fenpicoximid from Corteva start to expand into new markets, including in combinations with azole fungicides. Fenpicoximid, quite a recent introduction, but one that is from a new class and one that can provide good fit for septoria control where resistance has been a big problem. Bayer receiving an expansion in the UK for isoflurane, which is a relatively new fungicide as well. And orange oil now available for potato blight, which is an interesting development. Obviously, the bio market is one that is continuing to grow. In Central and South America, we're seeing Spidoxima introduced into Colombia. This is the very first global introduction. And that's an interesting one because it's targeted at the control of sucking pests. And this is a sector where there has been resistance issues and also regulatory issues against products such as the neonicotinoids in recent years. So this is a good sucking pest control option. We're seeing FMC start to introduce its pheromone-based products for fall armyworm control. Also, its new herbicide, tetflupyrolimet, which again is a new mode of action, which is very well accepted in the weed control market. Another new product from FMC, fluindapyr, now launched in Argentina. We've seen Syngenta also introduce cyclobutyryl in Brazil. New humiceate control product from Bayer in Brazil as well. Fentropidin now introduced in Brazil, and also a new insecticide, fluxamitamide, launched in Argentina as well. So a lot of new products of interest launched in 2025 that we'd expect to start gaining market share in 2026. For Asia Pacific, there is several here, so I won't go into them point by point, but we have seen new herbicides in India, such as tolpyrrolate. We're seeing new broad-spectrum insecticide, triflumetazopyram, coming in through a domestic company, but licensed in from Corteva. And a lot of new products in the Indian market, interestingly. Also, synmethylin from BSF, which is a new mode of action herbicide. Several new products coming into the Asia-Pacific market over the next year. A lot of it in India, but also a lot of it in India coming through collaboration with the multinationals as well. So a much more dynamic situation in terms of new product introductions in Asia Pacific, which we would expect to have an influence on market development as we move through 2026. Now, agrochemical pricing is obviously something that has been an issue and a key topic in recent years. This slide is looking at agrochemical price development for China. It's looking at ex-factory prices from China. And what we're seeing is indexed from 2019. So you can see the huge spike at the end of 2021. That is related to issues that I talked about before, where very high levels of pre-buying, high demand, post-COVID. and growers very much hoping to have enough supply to last them for that particular season or two. We did see then lower demand based on weather and high inventories then starting to lead to price erosion. This was also capacities were increasing as well. So more supply but less demand, so prices started to fall considerably. But as we head into 2024, 2025, we did see a normalization and it reverted to a much more normal supply-demand dynamic where pricing, it was obviously still extremely low by the index levels, but it was normalizing off. However, if we look through the current period into the sort of parts of 2025 now, we are, the prices are still considerably lower than where we were. We are seeing a lot of capacity being put online in China. We have a question mark here. Does that mean that price is going to continue to fall as we move into 2026? Expectations would actually be that we're seeing a bit more price stability as we move into 2026. We are seeing some actual price improvement for big products such as glyphosate, but some other big products such as chlorantraniliprole, we can expect price declines there based on, for example, increased generic competition. So high capacity, still an issue. And so supply demand not quite at equilibrium. So we are still seeing, price deflation, but much more stable than where we have been in the last couple of years. So I wouldn't expect it to have a hugely detrimental impact on market development in 2026. This is the situation in price development in the EU on the left and in the US on the right. The US chart actually follows quite a similar pattern to what we see in China, where it spiked up post-pandemic and then came down again. However, what's interesting about the US chart is that prices have actually been sustained at relatively higher levels than where we've seen in 2020. So price much more stable in the US, but quite flat again. But then again, expectations for no significant decline. EU 27, the dynamic is slightly different there. The biggest impact on EU 27 crop input prices was actually the Russian invasion of Ukraine, which pushed up energy prices in Europe quite significantly, which then obviously increased costs of production. So the curve is much different in the EU, where the big increase happened in 2022 following that event. We have seen prices start to come down slightly from the peak that they reached in 2023, but still, EU 27 prices still above what we've seen in 2021 and 2022. Now, commodity prices play a significant role in the development of the crop protection market. Obviously, how much a grower has to spend on crop protection products is strongly determined by how much money he is going to make for the crops that he is growing and then selling. So commodity prices are very closely tied to the development of the crop protection market. What we have on this chart is we've highlighted certain points in history where commodity prices spiked up to very high levels. All of these also correspond to very positive development in the global crop protection market. And we're also looking at futures prices here as well, just to get an idea if we can expect any improvement as we move through to 2026. So as you can see, the last couple of years has been quite a difficult situation for most of the traded crops, particularly maize and soybean, which has a huge impact on obviously US growers. But what we can see from the futures expectations is that actually price will stabilize, in some cases start to come up. Still not at the levels that we've seen in 2022, but a much more stable situation with no big declines expected over the next year. So the commodity price situation, while we're still looking at, depressed from where we were, by historical standards, not too bad. So not a huge impact from low expectations for declining commodity prices in 2026. This just gives an idea overall of where we're thinking in terms of the yearly average. So you can see the crop's still trending slightly downward, but not at the same rate that we've seen between 2022 and 2025. And in fact, some crops not so negative at all, including oilseed rape. But obviously there is still issues over grower profitability, economics of production that farmers have to overcome. But this is really highlighting that while we are still seeing a low commodity pricing environment, we don't expect, significant declines. So we're looking at a relatively stable situation, although, still having a significant impact on the grower. Now, there's a lot of information here. I won't go into every detail, but what it's really showing is the profitability of production for this slide's looking at US maize. The next one will look at soybean. And it just gives an idea on why we're maybe seeing a higher area this year at the expense of soybean. So you can see trading net price and return 2026 is expected to be, down by minus $250 an acre. So obviously, sorry, a hectare. So obviously, still a significant issue for US maize growers, but it's not as negative as what we've seen in 2024. If we look at soybean, okay, it's significantly more negative. So that's why we have, one of the reasons why we're looking at a switch away from soybean into maize. And again, we're actually looking at levels that are the lowest that we've seen in the last 10 to 15 years for 2026 soybean net return. So trading price is still quite low. Ink costs actually increasing quite rapidly. So what we're effectively seeing is net returns still in the negative, but for soybean much more so than for maize. Now, in terms of Europe, we're also looking at, which markets are planting more of the key crops. For the EU27, we're actually seeing a higher soft wheat area, which is, obviously one of the most significant crops in terms of the crop protection market there. France and the UK, very significant cereal markets, so increasing there, which is a positive. Some other countries declining, but, we'd expect the positives to outweigh the lower ones in countries like Germany. The other countries in the east and south, not so focused on wheat production as the northern countries. For maize, we're actually expecting a decline in maize plantings in the EU, which obviously would have a detrimental impact on maize crop protection market effectively. Oilseed rape, actually much more positive. We have seen more positive oilseed rape prices. We have seen higher demand for oilseed rape in a lot of different markets. Export demand is increasing as well. So this is a crop where growers in the EU are looking to plant much more than what they have in the last couple of years. Now, looking at other countries and regions in terms of crop areas in 2026, when you're looking here at, for example, Brazil, we're continuing to see, strong rates of growth in the key crops in Brazil. Maize and soybean both increasing. Argentina, big increases expected in maize and also wheat, which is quite significant in Argentina. So again, EU27, wheat expected to be up, which is a key crop in terms of crop protection spending. So we are seeing still, expected benefits from higher crop areas for key crops as we move through 2026. Overall, in 2026, we've listed out some of the key positives and negatives. There is obviously what I touched on, still weak market fundamentals that could impact demand, such as the low commodity pricing environment. Overall, we are seeing it much more positive than where we were in 2024, in my opinion. So inventory situation is much more normal. The USDA is predicting that crop protection chemical spending will be up. We have seen high pest pressure in terms of insect pests. Fungicides, this is a sector that can be impacted more than others by low grower incomes, so that's one to keep an eye on. We have seen a lot of price realignment, now mostly complete, and actually some price growth drivers through the tariff situation. And again, glyphosate has definitely been more positive in the last few months. So it is possible that crop prices, at the bottom of the trough, as we would say. So, not expecting overly positive, but not exceedingly negative either. And as I touched on, new product introductions as well, driving growth. Potential adoption of E15 in the US, so in more states and also during more parts of the year. we'd expect corn demand in the US to increase through that. We've also seen Brazil put much more of a focus on maize ethanol production as well. That's expected to double in the next few years. So the maize sector in Brazil are also benefiting from increased biofuel demand. There is some negatives that we're looking at in 2026 though. So we did have some good weather in key markets in 2025. If we do have less favourable conditions as we move through the year, this could obviously impact pest pressure and demand. Weather is obviously a key variable and a fundamental influencer on the market. Obviously, you can't predict it for the whole entire year, but if we take a more average year compared to 2025, then there could be the potential that demand would be impacted there. Weak agricultural economy still in the US and Brazil. Higher input prices of fertilizer and of fuel, for example, and this isn't being matched by any commodity price improvement as we've seen. So this does provide less purchasing power, potentially lower spend on crop protection. And there is still issues around high costs of borrowing, which prevents access to credit and makes it much harder for growers to purchase products as well. And again, commodity pricing pressure significantly reduced incomes in the US in particular. So I think in 2025, the US did benefit from about $40 billion in governmental support. I think next year it will be about 13 billion. So there is, a significantly lower amount of aid being put to farmers in terms of financial aid, but offsetting that is a normalization of the tariff situation. So that could, have an offsetting effect to that. Something else that will impact the market as we move through the year is loss of key products through regulation. So effectively in the EU, we have now lost, or we will lose in 2026, flufenicet, which is a huge cereal herbicide in particular, and also tebuconazole, which is a significant fungicide in the market. So value being taken out of the market by regulation is another issue as we move through the year. If you want to just quickly take a look at the sort of longer term trend, where we think the market is moving in the next 5 to 10 years, what are some of the positives and negatives? As I said, 2024 looks like the trough year, the definitely lowest point of a cycle, and we are starting to come out of that. And if you start to look forward in a few more years, what are the big drivers here? So pest resistance, as I touched on, is something that is definitely helping value development. Developing markets in regions like South Asia, Central America, Middle East and Africa, driving growth at the volume and value level. Further uptake of seed treatments and biologicals. The biologicals market, in terms of biopesticides, is one that is obviously continuing to increase. However, what I would say is in definitely 2025, 2024, we did have the issue that, grower incomes were squeezed as such that a lot of biopesticides that were deemed, interesting to use but not necessary were definitely reduced or lowered in usage. So we did have, a decline, or let's say a cessation of the growth in the biologicals market. So where before we were experiencing very rapid rates of market growth, in the last couple of years, I would say that's actually stalled quite a bit as economics of production and grower sentiment has shifted slightly as they've looked to, ensure yields and reduce spending. So we have seen the biologicals market being actually put under a bit of pressure there, offset slightly by continued growth in row crop use in Brazil, for example. And also in places like Southern Europe as well, still strong in terms of biologicals. However, the weather in Southern and Eastern Europe in this particular period wasn't really conducive to high levels of product usage. So the market there is impacted more by weather, but definitely economics of production, stalling growth in biologicals, I would say, in the last 12 to 18 months. But expected over the next 5 to 10 years, continued strong growth in that sector. And digital agriculture is increasing rapidly in a lot of markets and is becoming much more significant. We're looking at increased adoption of drone technology, improved online agronomic advice, which can sometimes provide a boost in terms of market value if the agronomist is, pushing a particular set of products that the grower would like to use. higher use of e-retail as well, improving access to products for a lot of growers where before it was an issue. Pest scouting and field mapping, so we can be much more targeted in what products we're using. But negatives, we are seeing some new GM areas coming through, particularly in China, as Roundup Ready soybean and maize will be introduced. Also, new herbicide tolerant trait stacks, so we're now looking at PPO, HPPD tolerance, as well as the glufosinate, glyphosate, 2,4-D dicamba. The impacts of variable rates and precision spraying technologies on volumes. So while these products and the formulation requirements could definitely boost value, when you're talking about variable rate or precision applications, there is obviously a negative on volume applications taking place there. Commodity and input price normalization. So we'd expect this to flatten out what we've seen compared to the last couple of years and be much more normal over the next 5 to 10. However, climate change, increasing weather volatility. I would also suggest there's perhaps a positive driver from climate change as well, in that we are seeing spread of pests from different regions where before they weren't really viable due to climatic conditions. We are seeing a differing spread and an increased spread of certain pests in certain regions. So that is changing spray requirements in a lot of different places. We have seen a slowdown in new active ingredient R&D coming through from the pipelines. We have had a lot of recent introductions in the last couple of years, but beyond that, we expect that to slow down as cost has increased exponentially. And again, geopolitical trade tensions obviously continuing to be an issue moving forward. We have seen a normalization in the tariff situation, but moving forward, there still could be a lot of uncertainty here. So thanks for listening. I hope you found that interesting, and now I'm happy to field any questions that anyone has.
Thanks, Derek. And as we move into the Q&A session, I just wanted to remind everybody that if you do have any additional questions for Derek, please feel free to put them in the Q&A box towards the bottom of your screen. And our first question for you, Derek, as energy prices are lower, how will this affect pricing?
Yeah, if we get a lowering in energy prices, let's say particularly in the EU, this will affect pricing. So a lot of especially in the EU, the impacts of the pricing was driven by energy costs. So if these start to come down, you would therefore expect, obviously, the cost of production to come down and then be passed on. So lower energy costs definitely mean, or should definitely mean, lower agrochemical pricing at the other end of the scale. So a reduction in energy costs, we would expect to lead to a reduction in agrochemical pricing, particularly in the EU, where it's much more of a driver, I would say.
Okay, and then the next question, for the launches of new synthetic chemical crop protection, do you know if these are more environmentally friendly, and are R&D creating new products to be effective but also good for soil?
Yeah, in a lot of cases, these products coming through from R&D do have a much more favourable environmental and regulatory profile than ones that we've seen in the last 10 to 15 years. So I'll use Corteva's new products like fenpicoxamid, fluoropicoxamid as an example. These are actually coming from fermentation. So they are chemically derived, but the initial development of them came through fermentation sources. So they are coming essentially from natural sources and not purely synthetic. So they definitely have a much more favourable environmental profile. And we have seen the R&D driven companies place much more of a focus on, the regulatory profile of these products as they look to launch into new markets. So I would definitely say that in the vast majority of the new actives coming through to market, they have been developed with an eye on the regulatory and safety profile in mind. So yeah, I would say that's a big part of these new AIs coming through.
Okay, and the next question, do you think the biologicals market will be grown in 2026 or will it be stable?
It's difficult to tell because so much of it is based on weather conditions for biologicals. So I would expect it to grow in 2026 because, as I said, it has been difficult the last couple of years, but a lot of that is just down to economics of production and also, the yield guarantee that comes from chemicals in some cases, where growers are maybe on the fence about biologicals. They're much more certain in synthetic chemicals in a lot of cases. So if there's any doubt, and if there's also lower cost as well, in this current economic environment, we start to see the synthetic chemicals win out over biological alternatives. But as I said, in countries like Brazil, where row crop use is expanding, we're also seeing expansion in seed treatment in different markets as well. We also expect continued growth in the EU in particular, as synthetic alternatives are leaving the market at a faster rate, where bio is perhaps the only alternative. So I think the situation in 2026 will be positive for biologicals. Similar to conventional chemicals as well, a lot of it depends on what the weather is looking like. But I guess for biologicals, a lot of them are used in closed environments like greenhouses. So, weather maybe not such an issue in these areas. But I would expect biologicals to get back on the growth trend in 2026. And we have seen a lot of investment in the space in the last couple of years as well. But like I said, row crops in Brazil are a big driver here, and we are seeing higher areas of the key row crops in Brazil. So my expectations would be a return to more positivity for the biologicals market in 2026.
And then this next question just piggybacks right on that. Is the R&D slowdown that you mentioned specifically relating to conventional synthetic active ingredients rather than biologicals?
Yeah, the slowdown is related directly more to the synthetic side of the market. So a lot of that driven by very high costs and also, uncertainty for the regulatory status of synthetic chemicals in a lot of markets. So a company doesn't want to spend $300 million to develop an AI and then have it leave the EU market after 3 or 4 years. So there has been a slowdown. Some of it also caused by the wide-scale M&A activity at the top end of the industry. When you had Bayer by Monsanto, Dow DuPont merging, etc. So there has been a general slowdown, and we have also seen companies be much more focused on pushing the bio side of their portfolios over the chemical side in a lot of markets and start to invest much more in bio. So the slowdown in active ingredients is directly talking about synthetic chemicals. In terms of bio, the market is still highly fragmented. It could definitely benefit from quite significant amounts of consolidation. There is a lot of investment, obviously, in the sector, but I still think we need quite a lot of consolidation before it can really take off. And when you see the consolidation start to appear, I think you start to see the bigger R&D companies start to focus on, development of pure play bio active ingredients. But for now, it's much more synthetic chemical slowdown in AI introductions.
And the next question, do you think that volatility in climate change related phenomenon will lead to a more volatile agro market, or is it possible for the market to adapt?
I think it will lead to a more volatile market. So, as the weather conditions become more volatile and also more extreme as well, what we do have is, as I mentioned, climatic conditions changing in a lot of regions, which makes the spread of different pests much different to what growers are used to controlling. But we'll also see, intense and higher levels of rainfall. This type of event would lead to, I would expect, less crop protection input usage because field access would be an issue, waterlogged fields would be an issue, the crop damage caused by this would be an issue. So if we're seeing, very high levels of wet conditions, that would definitely be detrimental. But then when you start to see, increased pest pressure based on pests being much more able to survive in the different climates that we would be seeing in different regions, I would expect more volatility as the weather is more volatile, but not necessarily, it's not a negative. It just is a change in how growers approach pest control, I would say, rather than, a decline. But again, it's market dependent and it's conditions dependent locally at that particular time. So we would expect, much more extreme weather events and therefore much more volatility in crop protection product usage, I would say.
Okay, and next question. Since China has opened up imports of soybean from the US, why do you still believe that soybean sowing in Brazil will rise? Isn't this opening up trade between China and US?
Yeah, I mean, trade has opened up again between China and US, but it isn't at the levels that it was pre-trade tensions. We've also seen China invest a lot of capital in Brazilian logistics and infrastructure in order to facilitate export of soybean from Brazil directly to China. So we have seen, ports and infrastructure, railroads, etc. China has invested in a lot of this in Brazil to try and improve its prospects of importing soybean from there. So I would expect China to continue to import Brazilian soybean, but again, obviously the trade agreement they reached with the US means they will also import US soybean. But I'm not sure if that will reach the levels that we had, a couple of years ago. So I think China has effectively diversified its soybean imports. And overall, I can't see the US retaking its full complement of soybean exports that it had a couple of years ago before Brazil became a key soybean exporter to China as well.
Okay, and can you comment more on China's crop protection market development with regards to the rise of local players active in research and development and the role and impact of MAD regulatory policy?
Yeah, so we have seen a significant ramp up in the number of new active ingredients coming through from Chinese development sources. It's not expected that these will have a big impact outside China. There is some of the smaller markets in Asia that these products have been introduced into, but we wouldn't have them expect to have a huge commercial impact outside China. But inside China, definitely it's providing the grower with much more options. We have seen companies in China develop herbicide-tolerant traits to go in conjunction with a lot of these herbicides. As we start to open up the GM maize and soybean markets, we will start to see much more uses of these herbicides in conjunction with the herbicide-tolerant traits. So it's definitely something that is shifting in the Chinese market as the number of locally developed and produced active ingredients. I wouldn't necessarily say this has a direct impact on the multinational companies active in China. They still have the products they can offer in certain cases. There is a lot of issues on intercompetition between other Chinese companies and the Chinese companies with the new active ingredients that have came through from development, but it's definitely going to alter the Chinese local market as we start to see more of these products come through from development. But again, outside China, I don't think they'll really move the needle too much.
Okay, next question. The agrochemical imports into Brazil are way above 2022-2023 levels. Will this lead to a decline in ag chem prices in Brazil, impacting other ag chem players like UPL?
Yeah, I mean, we have seen the pricing issues for agrochemicals, have a significant impact in the market in the last couple of years, and particularly in countries like Brazil, which is very reliant on Chinese material in particular. And again, a lot of the pricing issues stemming from immediately sort of post-pandemic when a lot of pre-buying was getting done, pushing up the price. And obviously, as I said, conditions weren't really conducive to usage, so we did start to have huge build-up in stocks. I would say, the price situation in Brazil is still much worse than what it was a couple of years ago, but it is, trending in a more positive direction, I would say. So the full impacts of the big price declines, I would say, have effectively been felt in Brazil, and now we're in a much more normalized and stable situation. What I would say is it doesn't really provide much hope for price improvement back up to the levels that we were before, because we are still seeing, Chinese production outstrip demand in a lot of cases. So there is still little expectation, I would say, for price improvement, but I would also say that much more stabilization in pricing in Brazil over the next year.
And next question. Does biological research and development open the door for more secondary and smaller developers than the traditional big six owning 90% of the global market share?
Yeah, I would say it definitely does. We have seen a lot of companies within biologicals that have, developed their own proprietary products. And in some cases, these can be out-licensed or even acquired by the big multinationals. But typically, the multinationals, will look to opportunity to in-license or acquire this type of technology from the smaller companies who are developing these biological alternatives. So there is definitely a place in the market for these developers to push new bioproducts in. I would also say we've actually seen quite a big development in the conventional chemical, the synthetic chemical side as well, with new players entering the market. I did touch on China, and again, a lot of the Chinese material not expected to have a significant commercial impact outside China. But what we have seen is a lot of companies coming from the pharma space or coming from, for example, academia, like spin-offs from universities. These are companies that have developed certain processes or they have certain technologies that can be applied to the discovery and development of synthetic active ingredients. So we're now seeing the big multinational R&Ds take a much more collaborative approach to product discovery and development for synthetic chemicals as well. And they are outreaching to companies like Enco, like MOA, like Agrimatch, companies that can either accelerate or reduce the costs of active ingredient development and discovery. As I said, the costs are huge, the timelines are huge. Anything that can be done to reduce that is a huge benefit to the industry. So the big multinational companies looking to work with smaller companies who have a certain interesting technology or application method. So definitely in bio, that is a big positive, but also we're seeing it much more in synthetic chemistry as well, where there is a lot of room in the R&D space for smaller players out with the multinationals with their own operations.
And the next question, in Brazil, with farmer income falling and an increase in bankruptcy filing, should this benefit the generic players more?
I think if farmer incomes in Brazil continue to be relatively low, in my opinion, it does definitely benefit the generic companies because, as I sort of touched on, anytime that farmer incomes are under pressure, we tend to see the generic companies benefit more at the expense of the multinational R&Ds who typically, the products are higher priced. So we would expect a shift more towards the generic side if the costs are such. And again, obviously the bankruptcies on the distribution side will obviously affect how the distribution channel plays out as well. And the R&D multinationals had a significant hold on the distribution channels in Brazil, I would say. So there is a potential that the shift in distribution in Brazil could also benefit these generic companies as well, make it easier for them to get their products to market in some cases. So I would say the biggest, definitely the biggest winners in the market when commodity prices are growing comes a low is the generic side of the industry. So yeah, in Brazil, I would expect that to be shown out over the next year if economics continue as they are.
Okay. And can you compare pricing in Latin America, the level generics are at versus what multinational pricing is? How far do you think price could fall?
I mean, that's quite a specific sort of question. I would have to look at the exact numbers on that, but as I said, in Brazil for the coming year, I'd be surprised if agrochemical prices can fall much further. We're almost at a point where, it's not feasible to really go much lower. We've seen a lot of companies in China produce below cost, so that's not obviously sustainable in the longer term. So I think we're at probably near at or very close to the bottom in terms of how low pricing can go. But for crop prices, that's a different issue. They can obviously decline much further. once the full production figures for 2025 are realised, this can then again influence crop prices, because if we have huge maize production, this can have a detrimental impact on maize pricing because global supplies are high. So, once production is fully ratified, we'll get more of an idea of where the pricing is going, but also significant little improvement expected in commodity pricing in Brazil. So still a difficult situation. It's very difficult to put actual numbers on it, but I'd be very surprised if agrochemical pricing could go much lower than what it's at now. And hopefully commodity pricing will start to stabilize as well.
Okay, and next question, and just so you know, we have about 4 minutes left. Is there growth in the generics market? Is there a correlation with research and development?
Well, we sort of touched on it slightly in the presentation, and that what we've seen is the generic companies actually outperforming the multinational R&D sort of proprietary side of the industry in the last year. A lot of it driven by what I touched on is a very difficult economic situation for growers in a lot of countries, and in those cases, it's more difficult for the higher priced product to maintain market share. So I would say, if the situation continues through 2026, we would expect that to favour more the generic side of the industry.
Okay, and it looks like we have time for about one more question. Let's see. I understand inventories are normalizing, but what is the likelihood of Chinese overcapacity for 2026, and what factors would be influencing this?
Yeah, the Chinese capacity in 2026 it will I expect be an issue, because we have seen a lot of capacities come online recently. Something I would say about the Chinese market is that there is a lot of capacity coming online, but not 100% of this is going to be utilized. We're also not, there is capacity also coming offline as well. In a lot of cases, production will shift from certain products less favorable in the current market to newer products that are recently off patent, for example, like pyroxasulfone, like fluxiperoxide. So chlorantraniliprole as well. So, there is a shift in product mix. It doesn't necessarily mean that this is going to, ramp up volume exponentially coming out of China, but we definitely are seeing a lot of capacity coming online. Obviously, what I touched on before is that means, little prospect of price improvement. But in a lot of cases, the capacity increase is focused on certain products that are deemed more attractive in the current market environment. Chinese capacity expansions are definitely an issue in price improvement, but what I would say also is, the Chinese government can be very fast to react if they see anything that is having a big impact on financial or productivity within China at that level. So we've seen the Chinese government force through actions before that have influenced the agrochemical market. For example, maybe 10 years ago, there was about 3,500 agrochemical producers. There was a fourth round of consolidation and close down, and now we're, 3 times lower than that. So the Chinese government can be quick to react if they see any potential issues. I guess one potential issue would be so much oversupply and price competition that all Chinese companies are effectively losing out. So the Chinese government could be quick to step in and curb, any of these capacity expansions. But as I said, it's not 100% certain that these will all produce all of these products, but it does, provide little prospect for price improvement, I would say.
All right, thank you. And it looks like we're just at about time. So thank you, Derek, and thank you everyone for joining us today.